Welcome to AM Best Audio.
According to a new AM Best report, retained earnings and new capital inflows helped drive the estimated capacity level in the insurance-linked security segment to a record $107 billion at year-end 2024. I'm John Weber for AM Best TV, and I'm joined today by two members of AM Best ILS team, Wai Tang and Matt Tuite. And Wai, what was behind the increase in the estimated capacity?
Thanks for the question, John. As noted in your introduction, retained earnings is one of the key drivers of the growth in capacity. The ILS market posted a very strong return again in 2024, with Swiss Re Global Cap Bond Index returning 17.3% and the ILS Advisors Index 13.1%. During the year, ILS investors earned healthy premium and spreads, and the ILS transactions are collateralized, with the collateral held in short-term assets like the 3-month U.S. Treasuries. The interest rate on the underlying asset also contributed to the earnings. Some investors have chosen to redeploy their earnings into ILS investments again, thereby increasing capacity. Second, another driver are the new capital inflows into the ILS market. The strong return are catching the attention of some of the investors, and they decided to allocate to the ILS segment. Much of the ILS capacity growth was in the 1448 cap bond issuance, which was a record year last year.
Matt, did any themes come out of the January 1st renewal period?
John, that's a great question. And to piggyback kind of on how I started off talking about capacity, that was a major theme, is that the supply of reinsurance capital, the capacity was much more abundant at the January 2025 renewal compared to the prior two renewals in January 2023 and January 24. And it's believed that the general sentiment was that supply exceeded demand at this January renewal period, and as a result, there was some softening in rates coming out of that renewal. And that was particularly true. That wasn't uniform across all deals and all renewals, but that was the general theme, and it was a little bit more pronounced at the more remote risk layers within reinsurance towers, which are typically the layers that cat bonds cover. It wasn't unexpected that there would be some rate softening in January. I think the general sentiment was that reinsurers and ILS managers were expecting some softening, given that from an ILS perspective, it was a rather benign loss year. But that was signaled in the pricing of cat bonds over the course of 2024, as you could observe there were year-over-year declines in the risk-adjusted spreads. So that foreshadowed the renewal outcomes that were observed at January 2025. But I think it's important to note that although there's some softening in rates, terms and conditions and attachment points held fairly stable from the past years, when especially in January 2023, when there was significant hardening of those attributes. In the 2 years since then, those attributes have largely held firm, and that's significant because those attributes have been cited as being a key driver of the improvement in reinsurance and ILS returns in the last couple of years.
Customize your data experience. BestLink now offers an interactive company dashboard that provides company-level intelligence in a fast, user-friendly interface featuring interactive tables, charts, and Sparkline performance histories. Customize the dashboard tiles to prioritize the insurer ratings, data, and analytics that best support your workflow. AM Best. Our insight, your advantage.
Matt, how significant were cat losses in 2024, and how much of an impact did it have on the ILS space?
So unfortunately, it was another major catastrophe loss year in 2024. Total insured losses were estimated to be, in the 130 billion to 140 billion dollar range, so it's yet another year in excess of 100 billion of natural catastrophe insured losses. However, for the ILS segment, they've been those deals and transactions were relatively unscathed in 2024, despite the very significant volume of catastrophe losses. Part of that is due to very intentional structuring of the ILS deals to reduce exposure to frequency-driven perils like severe convective storms, which have been a pretty perennial contributor of the overall cat loss volume in the last several years. So they've structured deals to get away from that exposure. So that's been helpful. And the other thing is that, as you mentioned, particularly with cat bonds, they tend to sit at more remote layers of the reinsurance tower, such that even major hurricanes like Milton and Helene, which are certainly contributed heavily to the overall loss volume in 2024, were definitely devastating hurricanes. It's just that those ILS deals, particularly cat bonds, were positioned in such a way that even those events, those peak peril events, were not market turning events for the ILS market. They didn't cause major disruptions in that market.
Why? What should we look for in the ILS space as we move through 2025?
Like last year, the cat bond issuance is poised for another strong year. Both sponsors and investors' interest in the cat bond space remain very high. Given the robust growth in the capacity, further softening in risk-adjusted spreads is quite likely. We may also see growth in the private ILS market, collateralized deals, as the investors look to other places to deploy their capital beyond their 1448 cat bonds. Also, I think we will expect to see a continuing effort to bring other type of risk into the ILS segments, such as cyber and securities. One wrinkle is the California wildfires at the beginning of this year. It may have some impact on the capital deployment decisions. However, on its own, we think it's more likely to slow, but not to stop, the further softening of the risk-adjusted returns.
Wai, Matt, thanks for taking the time to speak with us today.
Thank you, John.
Thanks very much, John.
That was Wai Tang and Matt Tuite from the AM Best ILS team. And I'm John Weber for AM Best TV.
Looking to get the full attention of the insurance industry? We have the platforms that will do just that. Whether it be AM Best TV, AM Best Audio, Best Review Magazine, or Best Day. Find out more by calling AM Best Advertising Sales at 908-439-2200, extension 5399, and have a great day.